Well, hello again, folks. I'm back to try and make sense out of some of the chaos. I've seen some volatility in my days, but we're getting two-way action in a lot of markets and a lot of big news items with Tesla. And is he going to sell 10% of his stock? And not so much COVID. So maybe we finally got a handle on it. I wanted to start off this morning with crude oil. I have stayed bullish crude oil for the longest time. I guess the near term, we had that pullback in August, and that's about where the stock market bottomed too. So it's interesting. There's a lot of Dow stocks and S&P stocks related to crude and oil. So I think that's what one of the major components in the index is. It's keeping it solid. But this, to me, is my range rules have been in effect for months. We're not even really getting below 50. And we recently had a shakeout. Well, that shakeout came after a few different positive reversal patterns that suggested higher tops, little bearish divergence that got ahead of itself. But folks, I have not changed my long term. Long term, I still think we will see crude maybe by March up over 100 and possibly 110, and maybe even by June to see 130. I know it's surprising to some people that crude could go that high, but when there's more buyers than sellers, and it's got to be an even match, there's more people holding longs. The number of contracts, both long and short, has balance, but it might be one person holding five longs and somebody else only holding one long or one short. But the balance is there. The structure is there to where this should continue much higher. This is a weekly. This blue line, this is not Bollinger Bands. This is something I developed about 20 years ago. I teach in my Edge course. That blue line is the value of 4 different moving averages on highs and lows added together, divided by 4. And then the bands around it for support and resistance. But when this back here, when this 9 moving average on close went above that upper band, kept it going. The range rules said it was still positive. We're showing positive long term, and that's daily. So this correction is probably about over and getting ready to start up again. We look at the weekly, it bounced off of that support level back in August and has been steadily rising since. And the monthly is even starting an initial breakout to the upside. So we've got a lot of support underneath of this market. I don't think we're going to get down to 73, but this is getting stronger. For those not trading the crude oil, or you might want to consider the XLE, and I think I've got an XLE chart we can look at. XLY. I know a lot of my clients like the XLE because they don't have to pick a particular stock. You can just go along for the ride. Yeah, here it is. It also, on the monthlies, is just starting to break out. There's your monthly, your weekly came back to support and turned higher. And your daily, I'll take this, we don't need this. Just show you a little shorter term view. You can see how that's been strong for a while. So it all turned up and bottomed out in August, made a nice higher bottom in prices. This little pattern here, when you have a low close, the next day it opens higher, never goes below the previous close and closes up strong. That's an additional point that's getting ready to accelerate. Plus the moving averages turned around and did a range rule shift. The 9-period moving average on RSI went back above 60. I think I got another one I can use. Oh, wrong one. Sorry. When the moving average 9 of RSI goes above 60, like it did here. That's a shift not only in the range rules, but a shift in the moving averages of RSI. This tells me when there's an initial upside acceleration about to begin. RSI is so much more than just bull and bear divergences. When you get into the internals like I have over the last 30 years, you get a whole new perspective. So that takes care of that. One quick look at gold. I think gold has put its low in for a while. The seasonal low is usually in September, end of September into early October. This was the 29th, and we've started up, and we're still going up. And yesterday was a couple days ago, big reversal day. So I think we're getting ready to turn to see gold and silver, especially gold, move up into February for its normal seasonal high. Stock market has been exceptionally strong. Plus, we have stories of, with the Tesla. I still think Tesla's positive. We have time. I'm going to jump to take a look at a Tesla chart. But I want to look at the indices, because what I was talking about with this 9-period moving average of RSI, we want to look at the monthly, weekly, and monthly, because this is one rule that I've taught, that if this 9-period moving average of RSI goes higher than 60, which is the top of the bear range, shows the range shift when the RSI goes above it. But then when the moving average turns around and goes above it, then you start to really see the acceleration. So it's actually going up there since January of 21. And the top chart is just 9 and 45 on close. We've had multiple positive reversals, and that 9-period moving average of RSI stayed above 60. And then the 45 went above the 60 level. So I've been even surprised myself, the strength of this move to the upside. And I'm not going to fight it. I don't fight markets. I try and identify my areas of higher probability with pattern recognition. So that S&P's been running that way. And there's the S&P. That 45-period moving average went above there in February. We've seen positive reversal patterns. Here's one here, 41.55 close, 41.66 close. Overextended to the downside in momentum, but not in price. So those that missed the previous bottom usually start jumping in. The moving averages were confirming. Let's see what else we got time for. I'm still positive on most of the commodity prices. In fact, people are making more money just sitting and holding than trying to time this market jumping in and out. I've always been a position trader, and I think I always will be. But the commodities are starting to wake up, and one in particular, the more money you make, the more expensive a dinner you can buy. And I think you're going to need that money, because when you look at cattle prices, they're pretty much in the same boat, moving higher. We've had long-term positives here, 103.5 on cattle. This one was 115. That's 12 cents added to 125, says 137. So we're still marching that way. And I think we've got more to go. Coffee is still positive, sugar. Most commodity futures are joining the parade to higher prices. And I think we're going to see it going forward. I think a lot of the commodity deflation we had with prices falling is done. I think the tapering and everything else, the money's already into the system. Now it's trying to feed down through into the different commodities. I don't talk in terms of supply constrictions or supply chain problems. I just look at price, and prices are moving. I think you're going to be surprised at what you're going to see in terms of cotton prices, coffee, sugar, crude, everything we've talked about the last couple months. Actually, since last summer, we started talking about them. But be careful. These markets are going to probably continue to be pretty violent almost over the next couple of months going into year end. And even with the crypto Bitcoin is still positive. Nothing's changed. People again are starting to call me and asking me, are we going to see 100,000 by the end of the year? I don't know if we will or not, but the chart sure still looks positive weekly. And the daily, that last sell-off we had back at the end of September went to new highs. Now another one that's going to lead to new highs. But even the 45 period moving average of my RSI value is above 60, saying there's good, strong internal strength underneath this market. So if I can help you, Traders 011, the international calling code, Traders011 at msn.com, and Cardwell RSIedge.com is my website. Skype, I'm available on Skype. If you write to me, I'll get you a Skype address and we can talk about it. I'm here to help, and just let me know if I can. But again, I appreciate you being here very much, and I hope you stay safe and enjoy the ride in some of these markets, because some of them are getting stronger. Take care. Talk to you the next time. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.